Right then, so let's get crack-a-lacking. There's still a bit of confidence out there, so the market is popping up right now.
I've got to set the cable trade too.
Oh, great. Okay. All right. Well, we can run through that first if you like, and then we'll check the news, and then we will look at these charts.
All right, I'm
Right.
just updating.
Well, just to start with, just want to say a warm 2020 to everybody, and a warm 2020 to you too, mate. How's things going?
Cheers, mate. And you look fantastic. I'm fresh, and that doesn't happen too many times during the year, I can assure you. You're a bit jaded.
Yeah.
But I'm as fresh as a daisy. So, yeah, really hot and trotting. Looking forward to, well, at least the first half of the year. And then I'll look forward to a holiday.
Why am I not fresh? That's the question.
I don't know, mate. Have you been working hard during the break?
I've been working a little bit, yeah. Yeah, maybe that's it. Maybe that's it. I think, to be honest, I did have an extremely long break this time. I took 2 weeks. I took a week to go and see some family in Wales, and then I went for a week up in the Lake District to go and see some friends up there for New Year's, and we were there for 6 nights, which is quite a long time, I think, to spend with people. But they're so
family.
yeah, I mean, they are actually like an extended family. They're such good people that it wasn't really a problem. Actually, we'll come to this in a minute. We've got about a minute and a half, sorry, 2.5 minutes before the market open. I am short, heavily short the FTSE 100. And I just want to quickly bring this to people's attention. Then we'll go on to the cable trade. So this is the state of the FTSE 100 now. There is a gap here that may well have been closed already, actually, or close as you like. Yeah, maybe it has been. Maybe that would have been judged to have been closed already. The daily and weekly pivot both sit in the same place, so that is an obvious place for some resistance, which is currently sitting around about 10 pips above. So watch out for a pop and drop this morning. If you want to enter this market without the pop, I would just put a little entry order below this bar here. I've been effectively trying to stay alive for the Christmas period. Possibly that's why I'm jaded as well. I have to say, considering how many trades I am in the red right now, it wasn't anywhere near as stressful as it could be. So I'm not sure why that is. I think my actual money management is just better than it ever used to be. So it doesn't really concern me too much when things pop up and don't come back. But I will start being
after all, I suppose, 2019 was really a development year for the way you manage trades, wasn't it? So
it really was, actually.
Yeah.
Yes, it was. That's a really good point. So I think that's part of it for sure. And I feel quite comfortable the market is going to drop. Let's see how far it drops. I could do with a significant drop down to, as we discussed just before we got on air. I'd like it to see it down here at the monthly pivot, and if it does, then I'll be. But that's my target. That's what I'm going to be closing trades out, and possibly.
Okay, I've just lost Ash. I'm not sure if Ash has lost me or which way it works, guys. If any of you in the room could help us out there by and hi Ravinder and happy New Year to you too. If you could just post into the chat box that you can hear either Ash or myself. Obviously, if you can hear Ash, you can't hear me. So I guess if you can hear me, if you could just put into the chat box as you can, then that would be good. It looks as though we've lost Ash, I think, but it could well be me. Or the whole thing's gone. Hello, hello, hello. Yeah, you can hear me. Okay, Ravinder, thank you. All right, I'll just take the screen then if that's the case. And we'll see if we can get Ash back. Obviously, there's an issue his end by the looks of things. All right, I'm just going to go straight to the pound because that is our strategy in progress. And we're going to see what we're going to trade today. I'm going to take you guys through a little bit of a wonderful result sheet. I've been keeping a journal on this, and I'll take you through it a little bit later on and show you exactly how this is working. So we're going to trade this bar here, and we're going to, why is that showing me 12 o'clock? That shouldn't be showing me 12 o'clock, should be showing me 9 o'clock. Ooh, that's interesting. Hourly chart, that should be the 9 o'clock bar. Okay, we're going to put our entry above here, right, by 10 pips. So let's do that. I'm just trying to work out why my chart is mucking up. Something weird going on. Aha, now we're right. So we've got the 9 o'clock bar, which of course is the last bar prior to London Open, and that's why we want to trade that bar. So we're going to put our entry 10 pips above here. I'll do it on the EA. I know quite a few of you probably won't have the EA, but it makes it a whole lot easier for me because I don't have to come back and adjust every 5 seconds. Righto, so we're going to put our entry 10 pips above here, so that'll be at 1.3104. Let's do that. We'll call it a slingshot trade. It is 1.3104. No, is that right? Yep. 1.3104 is our entry. And the stop loss will be at 1.3064. 1.3064. We won't worry about that. And I'll trade this at 0.5%.
That might be beat. I mean, am I back?
You're back, mate.
Oh,
Yes,
great,
absolutely.
great. Sorry about that.
We're going to disable TP1. We're going to disable TP2 if it's there, and that we're going to call that a buy order. So we'll be buying here, and I'm going to trade this, Ash. We're now going to trade. We've done 6 weeks of testing, which is about half as much as I'd really like to do on this, but I'm confident enough that we've seen good enough results, and I'll show you those results shortly, actually, when we've been through our previews. So we will reverse this for a sell order. So we'll go with, actually that's not the way to do it on this chart, is it? I'll bring up another pound US dollar chart and do it there. There we go. We'll use my template. There we go. So we're on the hourly chart again. We'll put an entry 5 pips below that bar. Again, I'll use the EA. %13.5%, Ash, in those 6 weeks we got.
Wow. That is amazing, mate.
And only 60% were winners.
Jeez,
so
that is brilliant.
Management's pretty good. Yeah. I'll show you how that worked in a minute. Oh, well, when we're done. So again, 0.5%. The entry will be at. This looks to be weird. That's a different result. Is that still the 9 o'clock bar? Yes, it is. The low is 1.30. Okay, that's better. 1.3064, which rings a bell, as it should. 3064 is our entry, and our stop loss will be the same as the entry long. So we'll go 1.3104. And we don't worry about profits at this stage. We will get rid of TP1. And if TP2 is there, that's gone as well. That will be a sell order. Okay, so whichever one triggers, guys, we will cancel the other and we will monitor it from there and manage it from there. Okay, so that is the cable trade. Should we go back to you, mate, to see that FTSE setup?
Yeah, let's do that. So we're looking
not
for.
Sure where you cut
out. Do you know? I just lost internet.
No.
Oh, sorry. You mean where I cut out? Yes. You need. This will stop other screen sharing. Do you want to continue? Let's see if you drop off. You still there?
I'm still here.
Awesome. Okay, so I'm looking for a pop and a drop. Progress. Looking for a pop and drop this morning. The daily and weekly pivot are. These are really good. This is a really good place to take a trade. So it's selling the market now. There's a 40 pip stop loss if you aim for the highs there, which wouldn't be the worst thing in the world, but yeah, because you can always enter again under the put one half on here with that one there, and then the other half under there if you like. But we are getting that pop and drop right now. It's just developing. So let's have a look at the 5-minute chart. It's just developing. Alternatively, you could wait for an entry bar, but I'm not sure whether that would be the best option. You could even enter here with a stop at the highs, which gives you around about a 20 pip stop loss, which is slightly more aggressive. But I really like this one. I really like this trade. I really like the potential downside. Loads of room down. When we kind of look at this market, I'm changing it to the 15-minute chart right now. So now, if you're going to get a 5-minute setup, you need to wait for the second 5-minute bar to close, because right now you haven't got an entry bar, so you've got to wait a couple of minutes. So if you wait for that one, we'll talk about that if and when it comes up. Now there's loads of room down. There's the first point of call is down here, which depending on where you've managed to enter is going to be around about a 30 pip gain for some profits. But I'd be aiming for a lot shorter and a lot deeper than that. There's this area here, which would give you around about 80 pips. But the real target for me is this monthly pivot. So, from this particular point, which is why, even a 40 pip stop loss isn't really a problem, because we're really looking at around about 120 pips from this particular area to drop down to touch this monthly pivot. And it's going to may possibly take a while to develop, where it surprises me that we haven't seen a more aggressive move so far this morning, really, considering the situation at the tail end of last week and into the weekend with this Iranian official Soleimani getting taken out, and there being an exchange of heated comments from both Iran and America. I'm surprised that we haven't really started to tank, but maybe that's the what Jeff was talking about. It's always it's easy to do the obvious thing, but the obvious thing very rarely works out. So maybe in this particular situation, it's not that we're going higher, but maybe it's just going to be more of a hold than many people would have assumed. But you only really need to look around, to see how the market feels about the situation. Gold, huge gap to the upside this morning. Yes, it needs to close that gap, but this is really telling us how the market feels about the scenario that's going on. There's as I say, a gap that needs to be filled. We've taken out this high currently with gold. Let's see if that can continue to the upside. I think Jules was talking over the weekend about the fact that the only people selling are the commercials. Nobody else is really short gold. So there is some gold supply that could just curb the movement to the upside, because they are heavily selling really at these areas because they're making a lot of money. So that's the gold chart. This is the S&P, also a gap to the downside. Huge bar really on Friday, which would suggest some downside. That is an engulfing bar. Even with this tail, it's an engulfing bar. It's not the best because of the tail. It would have been much better if the tail was above rather than below. But then again, down to the Dow Jones, doesn't have the engulfing bar, but maybe a little less buying aggression to the upside because the tail isn't too strong. And let's have a look at some of the other markets as well. CAC is maybe showing that we could be possibly putting in a head right now of a head and shoulders pattern. But again, holding on for right now. This is the Chinese market. This is the I think this might even be the Hong Kong 50, but it's coming up as China 50, so I'm not sure what that relates to. But it is a Chinese market. Also some weakness there. The DAX is gapping to the downside. Already the DAX has really started to put in some negativity. We got this belt hold on Thursday, and really it almost, a belt hold at the top end of a market can be extremely negative, because there are obviously people that are aggressively long here, which means that stops are going to be somewhere below, and we haven't really seen an absolute obliteration of this market just yet, but that does indicate that could happen over the course of the week. Eurostoxx 50 also showing some weakness. There's a lot of gaps to the downside here, and gaps do like to be filled, but there's no telling on when that would happen. Another gap in the Hang Seng, and the Nikkei is also showing some weakness as well, with some more gaps. So there's some nervousness out there that would suggest that we do swing to the downside at some point. The FTSE 100 is currently holding on, so there's enough confidence. And we'll talk about what else could be driving this market in a moment. But I'm just going to focus on the situation in Iran for right now. And finally, we'll just have a quick look at the dollar yen. Here we go. This is the dollar yen. Again, dollar yen broke out on Friday to the downside. Looks like it gapped down, but it's starting to kind of recover a little bit. So maybe there's a little bit of recovery or a little bit of holding on that could still be in the markets. But I would be looking for a flush out. Now, other drivers. Now, we were talking about the repo market on the weekend as well. Which, have you really looked into that much, Jeff? The repo market,
mate? No, I haven't. It's pretty much like, for me, market sentiment and things like the COT report and fundamentals. I get far more enjoyment out of you guys telling me what's going on, because you've done all the work, than I do about doing the work myself. So I tune in when you guys start talking about these things, because hey, you've done the work. Why do I need to do it? I know that's a very selfish and lazy approach, but that's just the way it is. I'd much rather pay for it than do the work, and that's why I think I don't pay that much attention to it, because I can just sit here and listen to folks such as yourself, such as Julian, who have done the research and get the result that I need.
Yeah. Well, I don't see there's anything wrong with that. That's what we're all here for, to share, isn't it? So let me just
carers, mate.
Share as a carers. You got it down. I'm just going to talk a little bit about the repo market, because this is a potential driver, and this is really in the Bible of Jules. And I have to say that Julian is probably the most informed of all the traders in the Actions to Wealth team. So when he speaks, we do tend to sit up and listen. He has been probably reading up on what moves the market and the depth of the market for a lot longer than any of us have been doing so. So he's
mate, and he lives and breathes it. On his trip to work, he's listening to podcasts and all sorts of things about trading. So his finger's right on the pulse at all times.
Yes, he is.
I mean, he does it for a living. Daytime, we do it. Well, you do it at daytime, I do it at nighttime because of time frames.
Yeah.
But he works at it, lots of hours per day and for a lot of years, and it shows, definitely.
Yes, it really does. It really does. He's Oh, do you know what? There is a setup on the FTSE 100, incidentally. Let's just have a quick look at that. So, 5-minute chart. Now, this is a very aggressive trade, but there's certainly a trade here. Now, I'd go under the low of the first bar rather than the second bar. So, I'm going to try and speak it in your guys' language rather than mine. So you're looking for a low under this bar, which would give you a low of, where is it? Okay, let's do it like this instead. So your entry is 75.80, call it 75.83, give you a little bit of room to the downside. Stops at the high, so let's give it a 20 pip stop. So you got 76.03 by the looks of things. 76.03 with a 75.83 stop entry. So there's around about a 20 pip entry there. And I would definitely look to leave some of this on the table because there is plenty of room. We're looking for a potential 120 pips down. So it could be a 6-1 if you were to take half around about break even if you want. You know, that's I'm not suggesting you do that because that's not the way I would trade it. I'd with a 6-1, I'd want to grab as much of that as possible. So I'm not too keen on taking profits in a market that I have a strong belief that it's going to collapse. Now, it is a strong belief, but it is by no means, or a strong opinion, let's call it that. It is by no means a concrete set in stone, because if I showed you the trades that I'm in, then you would know that I am wrong quite a lot of the time when it comes down to picking the right place to trade. And the key to trading is to recognize that you don't have to be right very often to make money. So maybe this one I'm right about, maybe I'm wrong about, but I would still want to try and go after it. You know, I'd want to see if I could actually get the whole 6-1 or close to. I want to get to at least a 3-1, and the way that I'd want to play it is by seeing if it collapses down below this area here, which would give you your break-even trade if you want. Actually, it's slightly better. That would give you a 2-1. But I'd want to see if it collapsed down here, and if it did, then I'd want to be then moving stops to break even. If it takes this area out, which is going to be around about 75.30, it takes out 75.30, then stops will go to break even, and then I'd be aiming for this this monthly pivot down here at 74.50. So plenty of room to the downside, and you know, it's a 5-minute trade, but this is the thing about you can be wrong a lot if you get a 6-1 in your in your bank. So that's why I like to aim for these if I possibly can, and I'd stick with it as long as I could. So let me flip back to the futures, and we were going to talk about the repo market. So this is the thing. My assumption is that the Iranian situation could well play out to give us some downside, and we've just looked across the board and seen that gold is flying. The S&P is showing some signs of weakness, as is the Dow, the Nasdaq, the CAC, the DAX, and some of the Asian markets as well. So there is a suggestion that it's got the market jittery, but we haven't really seen the same with the FTSE. Actually, the one we didn't check was the pound. Now, it's really important to check the pound when trading the FTSE, because if the pound is strong, then that would help the FTSE come down. But if the pound is weak, that could be enough to allow the FTSE to hold on a little while the other markets are trading to the downside. And you can see the pound is kind of flat today. And I think there's a lot of twists and turns in the situation with cable because of Brexit. So a difficult one to judge, but I do see the pound dropping down a little bit, as well as the worldwide markets. So let's see what else we use to determine whether the markets are going to be coming down. And the two really main things that I want to look at is, yes, you know, we'll definitely look at the COT report. That's really important. So let's call it three things. I also want to look at the seasonal patterns. So I'm going to bring up some seasonal patterns. So we'll get to that first. Wasn't the order I was going to do it in, but let's do that. So we're going to use the commitment as trade. Now you will be triggered into that FTSE trade right now, which is going to be good if it comes down. Now, if it does pop up, the FTSE, try and get in again short, but at a better price. That would be my play on it, and I'll come to that in a moment. Okay, so this is what we've got. These are the seasonal indications that we have right now. If we go down the list here, the pound is due for a bit of a drop anyway. When we look at the yen does tend to have a pretty strong period right now. If we bring up what it's like in January, then it looks like it grinds a little bit sideways according to the historical data. But when we look at the weighted data, then the weighted data does tend to perform fairly well during the start of January. So we'll be looking for some upside in the yen according to that, and according to the worldwide markets being so on edge. We didn't look at oil as well, actually. We need to do that. Gold, absolutely the same. Really, really strong seasonal patterns in gold coming up right now. So there's every reason to be trading gold long and sticking with it as long as you can. So if you've got a gold trade on, then you want to stick with it. If you haven't, look for, when you have such a strong seasonal pattern like this, and when you have such a strong fundamental reason, i.e., the potential of conflict, then the buy signals can be a lot weaker than you would normally have to rely on. So look for some weak buy signals in gold and try and get on board with that. Would be my suggestion. 10-year Treasury notes very, very important, because this is the bond market, which also will give us an indication of how people feel about the markets. Again, historically, they do really well during the start of January. So this is kind of a risk-off play when you start to see the 10-year Treasury bonds doing well. So I'd like to see what the sales of that are like over the course of the week. Now, I haven't got a chart of that on this particular software, so we'll see. We'll see if we can drag something up from somewhere else later. Do you know where there's a chart of that, Jeff, by any chance?
Sorry, mate. Just managing something there.
No worries. Just the bonds, the bond market. Any?
No, I've looked for it before, and
yeah.
I can't find it. No.
Okay.
You've got to pay for it, I think.
Got to pay for that. Okay. So we got this is the 5-year again. Bonds tend to outperform a little bit during the January period. We've looked at gold, and what was the other thing we want to look at? Right. We really want to look at the indices now. So let's have a look at the indices. Indices, FTSE 100 tends to be pretty weak. Look at how weak that is. Weighted average looks down. The historical data down. S&P kind of goes flat. The weighted average kind of goes a little bit flat to down. So that's fairly positive. I'd like to see worldwide markets weaker. If I'm trading the FTSE weaker, it gives me a better chance that everything moves down. Same with the Dow. Dow's moving down there. The Nasdaq probably slightly up, actually. The DAX historically is down, but I think if we look at the weighted average, it's kind of choppy at best. Kakarom, weighted average down, but weighted average choppy, but the historical data down. Nikkei is down. Hang Seng is down. So we got a lot of reason to be looking for shorts in the indices right now. So if we're building a picture, then we got a potential driver in this conflict. We got seasonal patterns looking lower. Now, if we quickly look at the COT report as well, I don't think it's going to help us out too much, but just in the way of balance, we do need to check it out. So let's just quickly check what the COT report is telling us.
And for the guys who are in the show for the first time, welcome to you, by the way. And also, the COT report is a commitment of traders report. So what it actually means is those who are obliged, I suppose is the word, or is it?
No, that's a good word. Yeah.
Obliged to report what trades they have entered into the market or are entering into the market, have to report this, and this is a chart of those trades that are in the market. So the commitment of traders report, you can Google that if you haven't got one, or you can tune into us every day, and Ash will update you as to what the commitment of traders is.
Yes. Now this is reported once a week, so it's probably something we'll get to on a Monday. It's as Jeff said, it's worth Googling the COT report. Get yourself a little bit informed on this, because it's really what the big guns are doing. The commercial players, the people that actually have a direct a direct hand in the products in the market, and the non-commercials, who are the speculators, the banks, the hedge funds, the guys that are speculating on the direction. So the commercials are really important because they really do have the products that are sold. So if you're thinking of gold, then commercial parts of gold would be the miners and the jewelers and all those kind of people that are actually in the supply chain. Now the Dow, as we see here, is as far as the commercials, has much more of a selling bias than a buying bias. We see the net short is around about 40,000. It's usually when it gets to these extreme levels, we can see that there's usually a correction coming, you know. So I'm just looking at this line right now. This is the simplest way to view it, really. Massive disparity between buyers and sellers here. The market did keep floating up, even though there were commercials that were selling. So it is by no means a timing tool whatsoever, but it's worth knowing if you're going to be selling a market, that that you want to be on the side of the commercials as part of your analysis, if possible. So really the commercial sellers are certainly slightly dominant when it comes down to the Dow. When we look at the S&P, we see something similar when this updates. Let's have a look. Yep, S&P, there is something similar going on. Unfortunately, I haven't got a FTSE one, but it doesn't matter. Actually, they're pretty locked in. See, they're pretty locked in, the buyers and sellers of the S&P. But we see that when the index here is high, it is suggesting that we should be looking for short. So it is at the upper end. You can see down here when it was low, then the market did start to rally. And then you start to see the players start to come into play, and the pressure kind of gets put on when it tips up at this level here. Then it's a bit more dangerous. But we do see the grind, if you like. So again, a pretty confusing piece of data to read in isolation. But all I'm really looking for is the COT report, just to give me a little bit more confidence of the direction that I'm in. And as I'm saying that, the FTSE 100 is now starting to fairly nicely move to the downside. So even from right now, you would be halfway home from your stop to entry. So you should be about 0.5% up already this morning, which is good. Now I want to make it clear that if anybody is just joining us today, and you're seeing this trade, and it may well end up being a bit of a Hollywood trade by the looks of this. If it does end up being a Hollywood trade, I want to just make it absolutely clear: this is not my normal record. You know, I do get these trades, but I'd say more often than not, the area that I've entered tends to be probably wrong. So you know, it's not that I don't make money on the market, because I do, and I make good profits. But it's, you know, if I'm calling a trade, then don't blindly jump on because you think I'm going to be right more often than I'm wrong, because it's probably the other way around. For me, it's all about how you manage a trade, which is going to make you a better trader, not if you can pick market timing. That is one aspect of it, but it's probably the least important. Would you agree with that, Jeff? It's probably the least important.
Oh, look, absolutely. I used to think it was the only thing that mattered.
Yeah.
But I agree with you. It's probably right down there with one of the worst examples of how you should be trading. You know, it's great to find good entries. There's no question about that.
Yeah.
But far more important what you do after that. Far more important.
Yeah, what you do after your trade is entered is key. Which is again why you need to be, if you're getting tempted to close this trade because you've made some money, I would implore you to walk away. That is not the way you're going to be a good trader. Do not be closing this trade early. Switch off your chart, switch off your money, do whatever you need to do to get this out of your head, and accept the loss if it loses, because it's still got a pretty good chance of doing that. Okay, now finally, we want to really look at the market's fundamentals. Now, the market fundamentals are driven by data points that each country will release, and we use Forex Factory for this. So this is just a freebie that we like to look at, and it just gives us a list of data that is due for the day, and we can read this data and get a fairly decent idea of the strength in the market. Now, you don't need to know what all this data means, but if you use a bit of common sense, then you can pick out some of the most important ones. Retail sales, that's going to give you an idea of the health of the consumer. So the buyers that are, the everyday people out there. And we see here German retail sales, pretty good. Casein Services PMI. Now, this is to do with the managers. So this is a little bit more under the hood. Services PMI out of China actually came in a little bit weaker overnight. Not a huge driver of the Chinese market. We're much more interested in the manufacturing side of it because they're such huge exporters of manufacturing goods. But services PMI being weak doesn't help. Now that number needs to be above 50 to indicate expansion, and it will be below 50 when it is indicating contraction. But they always give you this the color of the folder here, which is all yellow for right now. But we'll be looking at red and orange would be red is the most significant. Orange just one off from that, and yellow is the least significant. So nothing really today would be suggested as a huge driver in the market. Now that is a slight caveat to that, because every now and again it does prove to be otherwise. But on the whole, the rule of thumb is red folders tend to be potential market drivers, and the other folders are potentially a bit more nuanced. So nothing really tomorrow, apart from this ISM non-manufacturing PMI. That could be fairly significant because what this does, when we look at these numbers, this leads us all the way back to the central banks and what the central banks will do to continue to encourage the markets to move in a specific direction, and that specific direction is up. And what we've got currently going on is the repo situation, and that is, let me just read you a little bit about the repo markets. So let's have a look. Repo markets are, now it's important that everybody knows what these are, because this is where the Fed, which is the American central bank, are managed to add liquidity into the market, which is what's kept the market buoyant. Repo markets are an essential component of liquid government debt markets, acting as a transmission belt between money and debt markets, as well as serving to conduct key functions for the efficient operation of debt markets. These include, among others, credit risk management, funding debt portfolios, playing the yield curve, and covering short positions and settlement fails. The hybrid nature of a repo between a collateralized loan and a full transfer of ownership makes it a very versatile instrument for a broad range of market participants with a very different business model. However, this is at the same time the reason for its complexity. The note addresses the legal, structural, accounting, tax, regulation. I mean, the rest of it actually is not that important. What's important is that the central bank will use the repo market to fund banks and then allow those banks to go out and potentially buy stocks, which means that the stock market can continue to go up. Now, there has been this repo situation going on with the Fed, but that is due to expire, from what I was told yesterday by a very informed man, in 2 weeks' time. Now, if that happens, well, obviously that is going to happen. That is another reason that people will come out of stocks, because if the repo market starts to be drawn back, then there's less liquidity, and less liquidity means that people have less money to buy stocks, which will eventually start pushing the market down. So there's a few reasons that we are looking for shorts in the market, and as I say, we can forget the Iranian issue. We can forget the fact that we need to know which of these drives it down. The most important thing is that we have a catalogue of reasons to be moving this market down, and I think before this market did start to push down or show some signs of weakness, then there was a repo market and a Fed in place that was happy to sustain some upside in this market. Now, the other final thing I want to just touch on is the fact that every market does have patterns, and the FTSE 100 is showing a head and shoulders, and this is one of my favorite, if not my favorite pattern for showing market turnarounds. You know, this is a really good pattern for giving us the idea that the market is probably got a little bit tired. Now we can see here left shoulder, and when we bring this over here, we got the head, and we bring this over here, the right shoulder. Now somewhere along the line, if you've managed to pick it up in this area, then you have managed to get it on the right shoulder. Now, where are we at? You should now be pretty much at break even, 1-to-1 on your trade. If you're in now, I would encourage you to stay in. Don't get too excited by this. There's plenty of ways to get this to break even, rather than taking half off the table and bringing down your potential profit. Yes, it needs to take out this level, and I would suggest that probably the neckline is probably somewhere around about there. So taking out both these two levels will drive us down to the monthly pivot, which is the ultimate target for our trade, and we'll probably get taken out on a stop if we don't get to that monthly pivot. But that is the plan from here on in. I wouldn't encourage you to take half off. Just not the way I trade. I want to try and get as much out of this as possible. So that is really it for me, Jeff. I think we've covered just about everything. We've got a technical reason for a short with this Head and Shoulders. I think we've got a catalogue of fundamental reasons as well, and we've also got probably a market which is probably a little bit overcooked in this area for some further reason for some downside. We could look at some other charts, some other time frames, the weekly being, I think, quite significant, the monthly being significant, but I don't think we need to make too much more of a case. I think I'm pretty much done, my lord.
Cool, mate. Great coverage of why to get into a trade and all of those reasons that we need to do so. I don't go to that degree, guys, I've got to say, but let's show you how I look at the market and find trades that I think are something I can make money out of, which is obviously the whole name of the game. For some reason, my chart's not coming. Let me try again, in the famous words of Francis Albert Sinatra. I cannot start screen sharing whilst you are, mate. So you're going to have to stop.
Did he say that last bit as well?
He did, as a matter of fact. I was tuned in that day.
Okay, so I need to stop screen sharing. Oh, how do I do that? Hold on a minute. We worked this out before, didn't we?
Sorry, guys. Our technical ability in
there we go.
In IT isn't anywhere near as good as our trading ability.
It's terrible, isn't it, mate? We're really we're now the veterans on Zoom, and we can't work it out. I don't know. It doesn't hold out too much hope for everybody else. Yeah,
that's really sad. All right, and we're still called Paul Bottrop, both of us.
Yeah. Wow. Even more.
Way to go. Reason. All right, so the pound breakout trade has been triggered, and at the moment going in the wrong direction. Look, again, just backing up what Ash said, this is a complete strategy that we're working on, and it's win or lose. It's not a let's get flustered here at any stage. It's simply not that. This is a strategy that calls on doing exactly the same thing every single day, and that's exactly the way to treat it. So
and also, mate, as you said, does it only win 60% or it loses 60%?
Only wins 60% at the moment.
So it wins 60% of the time. So and it's still a highly profitable trade. And I think the beauty of both of us is that if one of your trades doesn't win, mine tends to do okay, and vice versa. So we're kind of picking up the slack, aren't we?
Oh, look, absolutely. Had we been trading this in the last 6 weeks, look, I might as well go through it now whilst we're there for the people who are in the room. This is exactly what happened on the 21st of the 11th. We started. I won't say trading this because we weren't trading it. What we were doing was monitoring it, and we're trying to work out the best way to manage it, as per what Ash was talking about before. It's not about how you get in, it's about how you manage. And this is absolutely a case in point. And the reason it's a case in point, if you have a look at all the losers here, we're risking 1% on each of these. This has only lost 1% twice. Now that's the management part of this. Our worst loser, apart from those two 1%ers, was 0.3949, nearly 0.5%. But if you have a look at the winners, sorry, the winners are, 1%, 0.58, 0.4, 2.96. This goes to what Ash was saying before. If you start to get 3% winners, if you start to get 2% winners and 3% winners and 1.5% winners consistently, and you're only losing, I think the average, in fact, I worked it out, the average loser was 0.38 of 1%, risking 1%. The average winner was 0.8 of 1%,
Nice.
risking 1%. So if you can do that, you could probably afford to have a 40% win ratio and still make money.
Yeah.
Okay, so
and the fact that it's 60%.
Yeah, means that we made 13.55% in that 6 weeks, risking 1%.
That's brilliant.
Okay, now there's two different management strategies going on here. One is that exactly as I've done today, I've put my stop where the long entry was, and I put my stop for the long entry where the short entry was. If I don't do that, and that was the result, 11.87% over those 6 week period, right? Using that method. If I put my stop loss at the high of the candle going short and at the low of the candle going long, that improves by what, 1.63%. The question is that worth doing? And I'm not going to continue to hold your hand on this, guys. This is a strategy I've kind of sown in your heads, and I wanted those participants in the show to actually exercise their own discretion, their own record keeping, to monitor this and tweak this, tweak the stop loss, tweak how you manage it. I'm trailing on a 15-minute chart, and I'm doing that at the moment, right? So I've switched to a 15-minute chart, and I'm going to trail every 2 selling bars. At the moment, I haven't got 2 selling bars because we only entered on this candle, right? But as soon as I get 2 selling bars, doesn't matter if they're up here, I'll trail the 2 selling bars. So the stop loss will move to here if we get 2 selling bars. If we get 2 selling bars down here, the stop loss will move to here. That's the management that I've suggested. It's not necessarily the best management, right? Definitely not necessarily the best management. And I'll be working on that. But I'm probably not going to share that. I'm simply going to trade this the way that we've designed it in the first place. And if I come up with a better way to do it, manage the trade, that is, then I'll let you know. Without doubt, I'll let you know. But I'm not going to share that day to day. I'll just work out my own journal. And I suggest you guys do it as well, because there's definitely, you can improve on this. You can improve on this for sure by just good management. And I encourage you to do that. And all you need to do is just monitor what you're doing each and every day. Monitor the candle you got in on. Monitor what happened after that candle. Was it worth taking profit quickly? Was it worth doing this X, Y, Z? There's 100,000 different connotations of how you can trade this. But anyway, that is the record to date, and I'll continue to update that daily, and let you know how it goes. When you're in a position of strength, which we are on this, it's not the time to get careless. It's the time to do exactly what you've been doing, and then maybe tweak a little bit here and there. I'll leave it at that, and go back to where I was, and that is my own strategy and how I get into the market. This is just one tool, guys, and don't mess with don't let it mess with your head. You've placed the trade. The only thing now to do is to manage it the way we see fit. In terms of would I actually have traded this, not in 100 years would I have traded this under my strategy. Reason? Because I'm trading straight into support, and you're seeing what that's doing now, right? We've come off that support level, and we've had a little bit of a bounce. Whether that's strong enough to take us long, who knows? Wouldn't have a clue. Don't care, because I know I've got this going in the right direction. So, Sorry, not this trade, but I've got the system going in the right direction. Until that changes, then who cares? Happy days. You know, if you lose, you lose. One day is. And actually, one thing I did want to point out on that chart, you notice these 5 losers in a row happened pretty much the Christmas week. So volume would have been down to Billio, I would imagine. I don't know. I wasn't in front of the charts. I've just done this retrospectively. And I also must say that where there was, and there were a couple of them, I can't remember which ones they were, but there were a couple of them that were bang on entry short, bang on the number. It's possible that they wouldn't have been triggered in a live trading event, but I acted as though they were. If they were losers, I acted if they weren't, if they were winners, if that makes sense. So I've counted the losers on those questionable entries, but I haven't counted the winners. So it could well be better than it actually looks at the moment. Anyway, we'll continue to develop that over the next few months. In terms of the pound, I'm actually bullish the pound. And forgive my little arrows, that's just where we've entered on the daily chart, on the hourly chart rather. Reason I'm bullish on the pound is pretty much because I like where price is headed. I'm bullish, but I'm not bullish yet. Sorry, I don't want to enter the market yet. I'll put it that way. I want to see price get down to at least this level, if not the trade line, and then give me, or trend line. Sorry for most of you. That's my little nuance trade line. I should have trademarked that, as I said actually before. It'll enter into trading folklore one day, I'm sure, and someone else will claim it. Anyway, it's neither here nor there.
Well, it's your book. That's got to be the one of your chapters in your book.
Yeah, look, if ever, can't ever see that happening. To be fair, but
I'd love to write a book.
I think it's one of everybody's. I started, and I think I got into about the 2nd or 3rd chapter. Like a lot of things, it's hard work. It is bloody hard work.
On trading, was it on trading?
No, I've written an ebook on trading, and
have you?
Yeah.
Oh, cool.
I put that on the scrap pile many moons ago because I don't think I was qualified to write it at the time. It was more experience to date than here's how you should trade. So it wasn't a encyclopedia of how to trade, but it was more just my experience on the way through. But yeah, it's on the scrap heap, so I don't think I'll ever worry about that again. Nor will I ever worry about writing a book on. I'm not interested, really, to be fair.
Yeah.
I just want to be there and trade, and reap the rewards of that rather than anything else. So I'm back to the pound. I am bullish the pound, but I'm not going to enter the market at the moment because I think there's more retracement to be had, and it's probably down to this 129.77 level as I've got it, where the confluence area is. So I'm looking for the price to get down to there, and then I'll look to trade it long. Or I'll look to see what the market does. But my bias is long, but I want it to get to here. Question I suppose now is, can we trade it down to there? Well, I guess we already are on one particular system. As I said from the outset, this is now going sideways and is very much a flat currency pair. I would suggest that a lot will depend on US dollar, and a lot about US dollar will depend on what happens in Iran/Trump scenarios, as will most things. We're in that position at the moment where the market is absolutely titchy. It's not sure because we're not sure what the repercussions of the assassination are going to be. The logical and most likely events is what Ash has described earlier, that the stock markets should fall. What happens with the US dollar is probably a little bit of a question mark, but I would suggest in the early stages, if war is happening, then you'll probably see US dollar rally. But if it looks like being another endless war, then I think you'll see the US dollar plunge. in the not too distant future. So this is just my take on logics, basically. So the positioning that really logically we should be taking is go safe havens, go gold, go yen, go Swissy, go. Don't trade the risk off currencies long, like the Aussie, like the Kiwi. CAD's a little bit interesting because it tends to follow what oil's doing. And I don't think we had to look at oil. And oil, of course, will tend to rally on. Actually, I want to have a look at the oil chart, and I'll show you why I want to have a look at the oil chart. The oil chart is showing me something very, very, very interesting. Well, from my point of view, my perspective on oil is I look at this chart, and this was before today, right? So this gap wasn't here, this candle wasn't here. When I looked at this chart, I immediately looked here, as I normally do, because that's exactly where prices stop pretty much. And then I looked down here, and immediately I recognized what that was. And that big gap there was the last time that Iran and the US had a little fracas.
Oh, was that the Saudi?
It was.
Yeah.
It was the seizing of the British boat in the Gulf, right?
Okay, so it wasn't the bombing of the oil refinery.
Oh, now you've got me.
No, that wasn't that long ago, was it? I mean,
it was one or the other.
Yeah,
I can't, and I didn't look it up. Anyway, it doesn't really matter which one it was.
Yeah,
it was certainly a conflict. And over the weekend, the market rallied almost 700 pips. So that's the gap that we were presented with on the Monday morning. The gap that we presented with this morning was, and you've got to realize that the gap probably should be there because that's where the assassination news came through. So really the gap was about 260 pips in my estimation. But the most important thing here for me when I looked at this chart yesterday was that. And I thought, okay, this was Iran-US conflict, oil surged because of that. And I knew at the time that this was not, actually it was a bombing. You're right with the bombing, I think, because they wiped out 5% from memory of the world's
That's
oil.
right, yeah.
And I said at the time, if that's 5% of the world's supply, that means we've still got 95% left.
Yes, yes.
Why has the market gone absolutely nuts over 5%? If it was the other way around, 95%, I would have said, absolutely, I get it. Thanks, Lewis, the bombing, yes. And sure as, God made little green apples, the market sold off, almost instantly. And not only wiped out the 700 pips, but took a couple of hundred interest as well. The difference this time, I think the difference this time is that we've had a prolonged buying campaign on oil. So we've gone, 3 months now? Probably 3.5, 4 months, 1, 2, 3. We're into our 4th month of buying oil. And that little fracas, which is yet to be determined if it's little or large, that we saw with the assassination, of course, it's going to do the predictable, which is have a rally on oil, because everybody thinks now that we're going to have a war, we're going to have oil rigs wiped out like never, like here, we're going to have oil refineries wiped out by Iran, because this is going to be a repeat. But the question mark over this one, if that first bombing took 700 pips from the market, or added 700 pips to the market, whatever you want to call it, this one hasn't done that. Is that because the market remembers this, and it certainly appears as though it does, because that's exactly where it stopped. But then we've gapped. Yes, and this was my analysis yesterday, right? So I'm still of the opinion that the most logical thing to do is to buy oil right now. But the most logical thing to do and reality are sometimes poles apart. And if I see any sign here of weakness in oil, I'll be looking to sell it. I'll put it that way. So, in particular, if we come under that line and then maybe put in a lower high, problem is we may not get that opportunity because it may just go tank. But generally, you'll get something like we did here, a second chance to get in. So, whilst yes, logically, I think oil must rally. As I said, oftentimes logic and reality are poles apart.
Mm.
Let's talk about the Aussie. We traded the Aussie. That was the last trade, I think, of the year, and turned out to be a pretty damn good one. Not as good as I would have hoped, and that, of course, goes back to Donald again. Exactly the same scenario. We entered the market on the 4-hour chart, if my memory serves me correctly, right here. So we traded this bar here, as just giving you some indication as the way I trade, guys. And I'm pretty much a freestyler, but I do have my little candle patterns and strategies and all the rest of it. So I saw a pretty strong base forming here and a higher low. The beautiful part about this candle was not only did it reject this level here, but it also had a high above the monthly pivot. That was the catalyst for me to put an entry above that candle, stop loss below. We risked 21 pips on that trade. We made 177 pips. We could have made a bit more, and my target is still higher. And it is, can't see it on that chart, but we'll have to go to the weekly chart. My target is still here at 70.80 or 70.81 as I've got it there at that beautiful confluence. This is a long-term trend line which stems from the top of, the lower high here and goes right through these two. So with this horizontal level, I think this is a really good place to make some money right here. So we can trade into that. What I'm waiting for now, again, the logical thing to do, because the Aussie is a risk off currency, is to trade this short. And look, I'm okay with that, because even if this goes down to here now, really the daily cycle is still higher high, higher low, higher high, higher low here, even if it does that. So whilst I'm not that keen to be an Aussie bear, I'd really like price to get to there, and like it to get to there quickly so I can jump back into the long and get that target at 70.80. But my bias will definitely remain long until these lows are taken out. Here's a nice little spot for price to go to, I reckon, at 68.30. So there's 110 pips available there if the trade presents itself. Some people will even like that candle to trade, I'm sure. That's not for me, but let's see what happens if we can find something here in the next day or so, maybe get underneath the monthly pivot and retest it or something of that nature. Then maybe we can trade it back down to here, but I'll certainly be looking for longs in this area without question. Look, I won't go through all the minors, but the majors are very, very interesting. The euro, I'm actually bearish, but only on short term, and that doesn't look as though it's going to pan out too well today by the look of that candle. Reason I'm bearish is, and as I said, only short term, is because I see this target down here as well. So it's very, very similar to the Aussie. The difference would be that this will upset the cyclicity of higher highs and higher lows if it comes down to here in a quick fashion. If it doesn't, and just ambles down to here, then the cycle still remains and you can still be a bull. And I'm quite okay with that, and I'm actually quite on board with that. But I think this level's got to go before I'm, looking at 115s, 118s, 120s even. And, looking at this chart here, the weekly chart, we are really still in a pretty vicious, I suppose, downtrend. This is a massive retracement on that, I've got to say. But until this level goes, I think I'd much rather trade inside these ranges. So for me, that means now trading back to the bottom here of the triangle. That's probably where I'm at, Ash.
Cool.
I'm short term bear the euro. I guess I'm the same on all currencies against the US dollar until they get down here and retrace substantially. I'm probably on the sidelines unless I get a really decent setup. That will come as probably I don't know, a significant lower high here maybe. There's a potential reversal there, I guess, but I'd like to see a significant lower high. Where that happens, great question. I don't think this is it because I don't think that's a significant lower high. So I'm still waiting for that to happen. If I see it at a significant level, then maybe. Not sure where that significant level is, and that's my problem at the moment. I don't see a level through here. It's going to give me a significant lower high, but that's what I'll be looking for. And I've already given you the euro and the pound. So pound is not looking great at the moment. In fact, I think we've been taken out of that trade. So there's a loser on the pound. Always the case, isn't it, when you've got a new scenario and more people watching, you'll have a loser on your first attempt. So
yeah.
That we will put down as a loser, guys. It is 1% off that. We're still 12.55% up. So if you traded that for the first time today, I'm feeling really sad for you at the moment. But at the end of the day, it's one trade, and there's a whole lot more to come in the ensuing months. So don't be dismayed at that. It's not the end of the world.
Absolutely, mate. Well, the FTSE's
How's
doing
yours
well,
going, mate?
pretty well so far. We had a lovely tanking of the first hour. So we'll see if that continues to move down. I'll just bring you the screen. There we go. So our trade entry was off the 5-minute chart here. And it was this bar here that we were trading underneath with the stops at the high. So, we're already, from to the low is about 2.5 to 1. And there's still plenty of room to go. So, as I say, don't get too excited. Best thing to do is just step back a little bit and allow this, draw some trend lines in if you need to. Looks like it should test this level here. And then from that level, we'll see if it can continue to stretch itself lower. Let me just remove these lines so it's a bit easier to see. Yeah, so we're looking for it to stretch lower. A pop back into that area and a test from below would be the one thing that I wouldn't want to see. And that would encourage me to close things down. But just moving back into this area and fading around about here should still give us a pretty good chance to get down to the monthly pivot. So still looking for around about another 70 pips down. There's a possibility that we only get as low as this low here, which is around about 50 pips down. So a shade more conservative if you want to take all profits around about 50 pips below where we are now. But best thing to do is watch the charts and see what the short-term timeframes are telling you in this area. Is there a significant enough hold to suggest that that's as far as we go? It's right now it's attempting to reverse from the lower point here and having a pretty good fist of it, but it does have to get above that level. So from here, mate, I'm walking away and I'm going to see if this one will develop alone without me watching it.
Right, mate. Happy days. Good luck with that. You can make up for the loss that we've had on the other one, and we'll come back tomorrow and maybe I can return the favour.
Yes, that'd be grand. That'd be grand. Okay, well, we will be back tomorrow, as Jeff says. Same trade time, same trade channel at 5 to 8.
5 to 8. Don't you be late. That's a date.
See you later, buddy.
See you, mate.
See you, guys.